Here we go, everybody. It's time to get back to the Dividend Diplomats YouTube channel and watch a brand new video featuring a technology dividend stock that may be considered an undervalued dividend stock to buy.
Now, before we dive in, make sure everybody smashes that subscribe button. Give Bert and I a nice thumbs up. Bert's really throwing that Tim Wakefield knuckleball in this dividend stock video. For everybody that knows Tim Wakefield, give a little salute out to him.
It might be a dated reference for a lot of people here, but Tim Wakefield, yeah, he pitched for what, like 20 years? The legend.
When you throw a 50 mile an hour knuckleball, you could probably pitch for a long time.
Yeah, you're not worried about blowing out that elbow. With that being said, everybody, this one is going to be a little bit out of left field. In our last video, one of our last videos where we talked about what my watch list, I featured 3 dividend stocks to buy. There was something unusual about it. It featured 2 technology stocks, which is above and beyond what I normally do. I haven't been heavy in the tech sector. It's never really been my focus. I have the tech itch, though. For some reason, I've been looking at a lot of tech stocks recently to buy that pay a dividend. So today's video is going to feature a different technology stock to evaluate.
Exactly, Bert. You do have that tech itch. The tech bug has bitten Bert. We're not talking about your Netflix, Apple, Microsoft, those Oracle, those types of tech companies, even Intel, which was featured on, the last video that, Bert's stock watch list, which I believe, Bert, you had even another tech stock.
Yeah, Qualcomm was on there too.
So we are sidestepping into a different part of the tech industry. This one definitely, we talked about them once, or I wrote about them once a long time ago.
Yeah, and what really piqued my interest this last few days, they dropped, I think it was 4% in one day here, and their dividend yield was closing in on 3%. So that's really kind of what jumped it. And you'll see the rest of the metrics when we run them through the stock screener. So it'll be interesting to see, is this a dividend stock to buy? It'll be interesting to hear what everybody's thoughts are too.
Guys, grab your seats, grab your loved ones. We don't know what Bert's about to drop here on this video.
Yeah. All right. Well, should we do the big reveal here, Lanny?
Hold on. Joy to the world. Who is it, Bert?
Christmas Vacation. Yeah. All right. This company, HP, ticker symbol HPQ. Yeah, I know. I had that too as I was running the stock screener. So what we're going to do here, I'm going to talk about their recent earnings, see some of the news that's coming up with them, discuss one of their recent acquisitions briefly that just closed. And then, of course, we are going to run them through the Dividend Diplomats Dividend Stock Screener.
Bert, you picked HP, definitely out of left field, not a stock that is going to be on too many individuals' radars. Mm-hmm. They are looking at some pretty sound metrics. And like you said, they have some pretty great highlights from their last quarterly earnings release. And Bert, was it Q3 that they recently have released?
Yep, it was at the end of August. It was Q3, so they'll be reporting here at the end of November too. But yeah, the numbers were great. Just to run through a few of them, the quarterly revenue was over 15 billion it was up 7% compared to last year. Net income was 1.1 billion for the quarter. Earnings per share diluted was 92 cents, up 77 cents compared to the previous year. And their free cash flow was over $1 billion as well in that quarter. So very strong revenue growth, very strong income, earnings per share growth, and strong free cash flow.
I'll tell you what, being a part of businesses, the dollars that are spent on that, honestly, printer infrastructure, copying, scanning setup is pretty impressive. And these contracts aren't typically month to month. They're typically 3, 5, 7, 10-year type lease agreements with servicing on top of it. Yeah. And obviously, a lot of money is still being poured into that. But Bert, that's not even their biggest revenue piece, which by the way, the printer revenue is almost 5 billion. It's one of their larger segments.
Yeah, it's personal systems. So all of their PCs, their tablets, their Chromebook, and everything else, HP crushes it. Revenue from that segment is over 10 billion too, so nearly double the printer, which so they are just dominating in that one sector too, and they have managed to continue to find ways to grow when people left HP for dead earlier in the decade.
They left in like the Undertaker, Kane casket match, just buried alive there.
Yeah.
And HP is very well known, you're right, Bert, for their Chromebooks.
Mm-hmm.
And if we take a step back with the remote education, learning, what is a popular product that you think was flying off shelves?
HP there. I know business is moving into their HP laptops too. I mean, they're finding ways to get back into the businesses, get back and help these sales continue to grow. It's been an interesting evolution to see.
I think the question everybody wants to know from you is, are you recording this on your HP Palm Pilot?
Yes, that's exactly what I'm recording it on. That's why the video is the way that the video is. No, but in all seriousness, though, some other items that kind of stood out as you go through the earnings is they are returning capital back to shareholders in a significant way, and not just through dividends with that yield that's nearly 3%. Their share buyback programs are pretty strong too. If you look in digging through the income statement where they show you the weighted average shares outstanding for the quarter, you see a huge drop off year over year. I mean, they are buying back shares left and right, dropping it from 1.4 billion shares outstanding last year, Q3, to 1.2 billion average diluted shares. It's a lot of shares being purchased.
That's the Undertaker tombstone to the shares outstanding. It's what they just witnessed. Shawn Michaels, WrestleMania round 2.
Yeah. And interestingly, I did mention earlier, IT is an acquisition. That was one of their recent headlines too. They just purchased a company. I think it's Teradici. So this time I might let you help me Italianize that name there, Lanny.
Hey, if it is Italian, I think you're just.
I'm kidding, but it's just adding into their portfolio. It's going to help grow their personal systems. I believe it says it's just going to help broaden HP's capability segment by delivering new computing models and software-enabled digital solutions. That sounds great on paper. Sure, it's going to help just keep continuing to help grow that revenue. We'll see how it works out, but it's just worth noting that they're taking this seriously. They're trying to grow that revenue there. I think it's always good to see at least.
And for those that are wondering, Teradici is actually a Canadian company.
They've been founded by those Italian Canadians. I'm kidding.
A lot of them in Montreal, a lot of them in Toronto.
Yeah.
But yeah, very big news. But they also avoided an acquisition within the last couple of years, a huge acquisition, almost a hostile takeover from the shares outstanding. Bert, who was looking to swallow them up?
It was Xerox, right?
It was Xerox.
Yeah.
Big Xerox.
Yeah, so they dodged that bullet there. And I'm just kidding because I'm just picturing back into they're going to turn back the clock to the 80s with an HP and Xerox acquisition.
Yeah, we're not talking like a Microsoft, Google, Apple, Google, Microsoft, and we're talking HP, Xerox.
It's like the Cavs trying to get as many centers on their roster as they possibly can.
Man, I can't believe. I'm sure if you're reviewing this and you watch NBA, let us know what the Cavs are doing with their team because I can't figure it out.
Yeah. Yep. Let's go. And while the league's zigging, the Cavs are zagging, and they are zagging to the bottom of the Eastern Conference right now. But that's a different story. We are here to talk about HP. So now, Lanny, I think it's time. Let's run HP through the Dividend Diplomats Dividend Stock Screener. You want to talk about the metrics of our screener briefly?
There's always 3 metrics that we run our dividend stocks through before we consider even buying a stock. This is going to help us evaluate if HP is a stock to buy right now. We focus on the 3 metrics, one being the price to earnings less than the S&P 500. You could take it a step further and really look at their peers, their competition, and really compare it within the industry. The second dividend stock metric is that dividend payout ratio, which really speaks again to the safety of the dividend, not only of being able to pay it, but being able to increase it while reinvesting back in the business. And that third metric, dividend growth. You wouldn't be investing into dividend stocks if you didn't have that dividend growth component, because the whole goal here is to buy dividend stocks that produces dividend income that grows year after year after year. And that's what we're going to find out about HP. Do they do that? And then Bert, that bonus metric is that dividend yield.
Yeah, so let's jump right in there. We're recording this on October 12th, so that's going to be the closing price date for HP. On this day, let's jump into this first metric, the PE ratio. Their price was 26.55 to close the day. Their forward earnings estimate, which we pulled from Yahoo Finance, and its aggregate of earnings expectations based on analyst coverage, is $3.73 for HP. That gives you a PE ratio of 7.12.
Jinkies. Wow.
Yeah, that's low. That is less than less than five. The market's what, 5 times trading higher than that?
What stock were we evaluating earlier? Was it AbbVie or was it what stock were we evaluating? No, it was Lionel Basel who had like a 5 or 6 PE ratio.
Yeah. It's always interesting when it's in the single digits, and that's kind of what helped catch my eye about HP. It is just a shockingly low PE ratio at the time.
Yeah, so very low PE ratio. Going into that second dividend stock metric, the dividend payout ratio. And Bert kind of coined this perfect payout ratio, which is between 40 and 60%. So with HP, they pay an annual dividend of 78 cents over the course of the year, around 19.4 cents per quarter. Very odd, but that dividend payout ratio is pretty low. I mean, we're talking 21% rounded. So
Yeah.
plenty of room to buy, acquire, reinvest back in the business. Oh, pay that dividend. And as we'll get into that third dividend stock metric, grow that dividend, baby.
Yep. So let's move into that third metric. The 5-year dividend growth rate for HP is 9.39%, and they've increased that dividend for 10 consecutive years as well. So they're building a nice little dividend streak there. Last year they announced a 10% dividend increase, and they are getting ready in November to announce another dividend increase when they release earnings and time it up there. It'll be interesting.
Now, Bert, speaking of dividend growth, we just talked about that 5-year growth rate at almost 10%. So during a pandemic, they stay consistent, is what you're saying.
That is exactly what I'm saying there. And it'll be interesting to see what that dividend growth will be, because if they're crushing it from the top line, the bottom line, they're generating $1 billion of free cash flow. You can make the argument that they should announce another double-digit increase that's 10% or more even.
And if they're pulling the IBM move by also reducing the heck out of your shares outstanding, that dividend growth is going to be good.
Yeah, exactly. So let's move into that bonus metric, the dividend yield. Currently, their yield is 2.92%, so almost at 3%. So fascinating, almost 3% with a nearly 10% dividend growth rate on average.
Really like that factor, as you know. Now, 3% is already 2 times the S&P 500. 3% is also 3 times Apple, 3 times Microsoft plus. And it seems like HP has performed pretty well year to date and over the last 52 weeks. They're up 10% from a stock price, and they're up almost 35% since last October. So it's not a slow moving stock. It's actually a decent performing stock.
Yeah, and this month it's really been beaten up. It's down over 6% in the last month, and over the last 5 days alone, it's down 3.84%. So
it's got to be that last ride that the taker gave.
Yeah, no, exactly. So here to summarize the metrics here for HP, PE ratio 7.12, payout ratio 20.78%. 5-year dividend growth rate 9.39%. They've increased that dividend for 10 consecutive years. That should be 11 here in November, so everybody stay tuned for that. And their dividend yield is 2.92%.
I mean, passes all the metrics. It's in an industry that, again, obviously we're moving towards paperless, but even so with the paperless, that's only one segment of their business.
Yeah.
But, docs are still being printed. I don't care what type of company you are, that is still happening. Personal systems is obviously a great component, period, especially with more and more things being remote. I mean, Bert, what else do you have to say about it?
No, I mean, and if they're moving more into Chromebook, they're making acquisitions to build out their suite and build out their products to get you better personal equipment to gear up for that work from home, that work remote, and heck, even coming up with some new personal printer lines too to help ease and build out that home office. They're not just stagnant, just begging companies to go back into their office space. They're trying to go at least here on the attack, it seems, from the outside and what we're reading to make sure that they can continue competing throughout the 2020s.
And I'm pretty sure,
You're looking for an HP around there, aren't you? You're looking for something
that
as HP.
I say that because my wife, where she works, their entire fleet was HP, but they actually just switched. So, again, that's also a component to their business, is that when a company, I believe where we used to work, Bert, where you and I used to work, I believe they went an entire HP fleet.
Yeah, they were piloting HPs for some people. Then after we left, they went to the HP. They moved away from those ThinkPads and that beautiful red dot over to HPs.
Beautiful red mouse too, right in the middle of the keyboard.
So but here's the thing, everybody. So now what do we do here? What am I doing with HP after seeing the metrics? Am I running to buy? No, but are they going to be high on my watch list? You bet they are. It'd be interesting to see what's going to happen here with the price, especially once that yield crosses the 3% mark. I'll be very interested, and it'll move up along with Intel, Qualcomm, and Contour on my recent watch list.
I mean, Bert, you know what it sounds like? It sounds like Bert the Hurt should probably put in a nice buy order, a limit order at $25.84. Put the limit order good until canceled, and maybe you'll hit.
Maybe we'll find out. So stay tuned for our future purchases articles here and videos. I mean, not articles. We're recording this, so purchasing videos here because to see will I actually be buying HP in the coming weeks. But I'll tell you what, the metrics are looking very, very interesting, at least.
There it is, Bert. HP dividend stock to buy now. Let us know what you think in the comments. Is this looking appetizing? Do you own this stock? Did you even think of looking at HP as a dividend stock to buy right now? Please share the feedback in the comments. Bert, anything else?
Subscribe to our channel if you haven't already. Give this video a thumbs up so we can keep pumping out stocks, and let us know what other dividend stocks you want us to look at over the coming weeks.
Again, that was Bert the Hurt, and this was Laney from the Dividend Diplomats. Over and out.